Good morning, everyone, and welcome to the European crossover webinar. And just another extreme day in equities. Yesterday, we were limit down in SPOOs and um, um, NAS, and today we're limit up in NAS in equities and SPOOs, although from a much lower level from yesterday, which I guess to a certain extent is going to be the case with, or essentially, I should say, the norm. Looking at the economic calendar for today, in an hour and a half, we'll have UK claim account and employment change in rate. And then in a couple hours from right now, we'll have German zoo numbers and Eurozone labor cost. And later on this morning, we will have New Zealand dairy prices. One moment. One of the guys just got an email that the webinar was starting, so he was just asking if it's on right now. So it is. Hang on. With the time change, it's throwing a lot of people off, so hang on. And as we roll into the States, it's going to be U.S. retail sales, followed by Canadian manufacturing sales and industrial output. And let's go move this out of the way. But yeah, it can be challenging. Like I said yesterday, a bit frustrating. At least I was a bit frustrated because not that I generally trade on Sundays, but I mean, to see the equities quickly go limit down, just like nothing until we came in the morning, and then quickly went limit down, and we had to wait. Well, now we're back to limit up. So it's a bit interesting to see these things. Although we had a big changes, obviously from the Sunday session, coordinated bank central intervention, but we'll go on and just take a quick overview. You can see here where we came off these lows here. And here we are at limit, and this is on the NAS, but on a 1 minute. We'll go to the 30-minute. You can see here, limit up. Actually, it's on a 2-hour chart. Looks like I don't have my 30-minute NAS. Anyway, let's look at here on the daily, and you can see how far we've fallen here. These moves have just been something else. And let's go on and jump into the SPOOs. And boy, what a move here. Some of this we can clean up a bit. And then also we can jump into gold. Gold's been quite dramatic. Several people were trading gold. I actually traded gold myself yesterday, and it was tracking equity, specifically the NAS, rather closely. Um, Probably just had a far better day just trading gold as a proxy for the equities because it certainly was moving back and forth on that. Hang on. But look at it, was all over the place. Here's on a 2-hour chart. And here we are pushing back lower. And this is right here. And I was warning people here in the chat room, hey, watch out. And we kept dipping back. And I caught a little bit, but I tell you what, I would have done better just trading gold throughout the day as opposed just to the equities. Although I started good in the morning, got a little bit chopped up early in the afternoon, basically deviating from what I like to do, which is just primarily scalping. But you can see here, we're back on the defensive mode here. Crude's back above $30. You can see the moves that we've had here just on the 2-hour chart. Just because we spooked some people, we got down here $28. The next thing everybody was calling for $20. We saw a nice rally back up. We kind of dipped back. I remember 26 sticks in my head. It's like 26.19 or 26.07 was very, very key. I remember doing an interview with Anthony Crudele, and I remember my number was 20. I think it was 26.07 or 26.19. I think the low was like 26.30 or something like that. Back then, we were really falling apart a few years back, and that was it. And we turned around and didn't look back. So I kept thinking, okay, if they get down to 26, I'll step in. But I haven't done anything with crude oil since right before the announcement. I took a short, and it was just when they had made the announcement, I jumped in, but the market had already been down, so I just rode it for just a little bit, and then I was out. So let's go on and move into the news. We'll get into FX. And today's a good day to cover the news. I mean, it's because of the whippy moves we've had, and whippy move is no doubt. Look at the yen. I mean, golly, we last week we're falling apart. Then we rally real hard. Then we come down. Then we press back up. Then we go back down. Now we're working back up. I mean, it's just like a freaking roller coaster. So the Australian-New Zealand dollar struggle, more policy stimulus unveiled. The Australian-New Zealand dollars hovered near decade lows on Tuesday as the mounting economic damage for the coronavirus kept investors on edge, although a hefty helping of fiscal stimulus in New Zealand gave the Kiwi a lift. The Aussie crawled up to 61.12 after touching 11-month trough at 60.76 on Monday when the global financial market sank further, addressed selling of profitable assets to cover losses elsewhere. We have updated our FX forecast in light of the growing economic, financial, and health crisis, said Elias Haddad, senior currency strategist at CBA. In our new view, Aussie will fall to 57 in Q2. Wow. Though a fall to 55 is even lower, or even lower is possible. The Kiwi 60.49, low of 59.29. Slight bounce was helped by the announcement of 12, no, it wasn't 12, 2.1 billion a fiscal package that amount to 4% of GDP. The package is big, Bold and beautiful in part, said Gerard Kerr, economist at Kiwi Bank. It goes some way to backstopping businesses and reducing the risk of and rise of defaults. Move followed an emergency rate cut of 75 basis points by the RBNZ on Monday. Wow, that is huge. I mean, for the RBNZ, they really did grab the bull by the horns. Like most analysts, NAB economist Kaxin Axiong believes the RBA will cut rates a further quarter point to 25 basis points and outline plans for controlling the yield curve. That would see the RBA committing to buying government bonds for monetary policy purposes as its target bonds yield to ensure the risk-free interest rates stay low. Additional policies cannot be ruled out, particularly if the bank detects any problems in the supply of credit in the financial system. The conservative government of Prime Minister Scott Morrison has also floated plans for a second stimulus package. Wow, gotta say, give it to these guys. They have really come out and done what needed to be done. They didn't play around in both the RBNZ and the RBA. Yen ticks down in choppy market and sentiment still fragile. The safe haven Japanese yen ticked down as some risk currencies want a brief reprieve on signs of more economic support from policymakers through the choppiness continues. The choppy conditions on Tuesday underlined the fragile confidence in markets frazzled by days of turbulence. Look, I think the only way you can be doing this is just basically scalping it or short-term trading it. This pair is all over the freaking place. I mean, just all over. And I mean, if you're going to trade the dollar yen, I think you should just be essentially scalp / day trading. Look at this. Look at this. Down, up, down, up, down, up, up, down, up, up. I mean, it's like Looney Tunes. But anyway, getting back to this, market liquidity was light and investors remained nervous after coordinated moves by central banks and spectacularly failed to quell trepidation over the coronavirus pandemic. Helping the dollar against the safe haven yen were signs that governments are stepping up in fiscal support measures. In the United States, Boeing confirmed in its talks with senior White House officials and congressional leaders about short-term assistance for itself and the entire aviation sector. Still, the market sentiment remained fragile after global risk assets were ruled out, were routed over the past several days on worries of the outbreak and draconian containment measures could trigger steep recession in major economies. Liquidity is even worse compared with yesterday. Even the gold has been sold sharply. This is a world I have never seen before. This crisis is more incomprehensive plan than previous crises like the tech bubble burst in 2000, LTCM in 98, said Kaida, head of Forex and Street Bank in Tokyo. Yeah, and one of the things I believe about that, these moves are so great that sometimes you have to step back. I mean, I think it was the last 45 minutes, I just like, that's it. I'm out. I'm done. And then I saw that eventually we really sold off really hard. But you kind of have to give yourself a break and kind of like recalibrate or reset. And then that also during these days moves, if you're trading equities, indices, I think you have to be very deliberate with your moves. These moves can swing back and forth so quickly. The sentiment changes. To look, it looks like it's going to go lower to no. Now we're getting a correction. We're moving higher. I'm talking about intraday, and then all of a sudden, if the bottom falls out, and then we're dipping again, and then it dips even further. So you really have to be deliberate in your moves and not get too easily swayed in the back and forth movement. At least that's my take. Anyway, the British pound is also under pressure, dogged by worries about not only Britain's exit from the European Union, but also its sizable current account deficit. The emerging market index rate dropped 0.2, staying at its lowest level since late 2018. A rout on Wall Street on Monday stemming from fears over the coronavirus in the West trumped the Federal Reserve's emergency cuts on Sunday. Investors took the Fed action joined by central banks elsewhere as insufficient given the pathogen's breakneck speed. Central banks are pressing the gas pedal to the floor, but the car is bogged down in a quagmire that is called coronavirus. So it won't move forward, said Ayoko Seta, market strategist at Sumitomo Mitsui. There's no clarity on that front, with global cases now rising to 174,100 with 6,700 deaths. Wow. Prompting countries to shut borders and take increasingly drastic measures to reduce the severity of the outbreak. And lastly, near zero U.S. rates may not sink the dollar. When the U.S. Federal Reserve cuts interest rates to near zero on Sunday, the dollar fell since the move blew away the yield on owning dollars and much of its other than its traction. Yet, few are willing to bet on a prolonged decline. Pandemic fears are roiling markets during a scramble for both the safety and funding in the world's reserve currencies. Analysts are already discounting the dollar slide on Monday as modest and maybe temporary. Given the scale of the Fed's emergency move, they're also drawing a distinction between the unwinding of the dollar's yield and what happens next. We had this very, very bold move by the Federal Reserve, said Paul Mackett, head of emerging markets in FX in HSBC. But if you look at the reaction of the markets, it's very mixed, if not underwhelming. And if the currency market, specifically the dollar funding, still remains quite tight, said the dollar was drawing support for various reasons, that from investors seeking safety from the wild trading in other asset classes to businesses that want to be cash rich in uncertain times. Whenever you have a big enough financial shock, the scramble for liquidity in the reserve currency in the world, which is the dollar, typically intensifies, Mackle said. Despite the Fed's 100 basis point cut, aggressively liquidity measures, the cost of the borrowing dollars internationally reflected across currency swaps has kept rising. Japanese banks on Monday were paying 10 times the average price to swap yen for 1 month dollars. The dollar has historically gained in spot markets whenever there's an offshore funding squeeze, since it's always against the backdrop of global uncertainty and market volatility that tends to hurt the balance sheets of non-dollar economies. This time, the dollar yields are also higher than those of the Eurozone or Japan. In the spot market, the euro was recently unchanged against the dollar. Both stayed below recent peaks, that mean the yen too, and the dollar surged against commodity and emerging market currencies, adding to the already massive gains of the pandemic headlines as they flowed across screens. The dollar's gained around 10% against the New Zealand and 12% against the Aussie, although positioning data has the value of long dollar positions tumbling with the unwinding of the euro-dollar carry trade. The market remains long dollars. Nomura's Japan's brokerage and investment bank said on Monday expects the dollar to extend already big gains against the Korean won and the Thai baht. The Singapore dollar will fade against the dollar. Westpac's Sean Callow said, as long as the investors worry about the virus remains, demand for dollars should stay strong. It's hard to see much upside for the Aussie and Kiwi or Canadian dollar given what's happened with commodities and energy prices in general, and sensitive to risk appetite. So with that, we'll go on and move into the analysis. So the euro rebounded on Monday as equity markets were under pressure. The euro pared back from the resistance of 1231, closing in at 1172 or closing at 1172. Resistance remains 1231, supported It's followed by 885, where support comes in at 1095. Well, we saw a pretty big rebound here. This was our resistance yesterday, 12 at 31/85. We made it to 31, and then we kind of rolled back. Still a pretty good, strong day, but now we're a bit under pressure. Still, when we opened up here, 1190, 1231 is still going to be resistance. And then on the support, it's going to be 1095. The only difference is we'll kick off the 85. You know, we should see pretty good volatility going forward in FX overall. I mean, needless to say, I mean, we're seeing that. Probably doesn't sound like much. What I'm saying is just like the story we're saying is that until we get past coronavirus, the dollar's still going to go and remain in demand. And then once things eventually, pray to God, we going and back away from this, then you'll probably see the dollar swing back and forth again. So it's going to, you know, I think thankfully volatility is back to stay here with in the currency markets. So it would appear. So the cable closed lower for the day in a wide range, running into the bias chart resistance at 2405. Support level 2204 held with an additional support coming in at 2160. Well, we've even continued to press further here. Look at this. It's just not even letting up. And there's our support coming in right there. We said 2160, and there it is. And that's going to be our support for today, 2160. It's amazing how things have turned so quickly against the cable. Yes, we had closed below. You know, we got this breakout here as the dollar, you know, initially sold off. And we came back in here and we said, okay, now we've closed back here. This is 2 consecutive closes. So once we closed below the bias pivot, I said, hey, we got 2 consecutive closes. Now it's going to be bearish. That being said, I didn't think the wheels would literally come off the caboose. And boy, did they come off the caboose. And we have really come under some kind of pressure, even exceeding at this point to 78% and pressing even further. Our support, though, for today is going to be 2160 with resistance for right now, keeping it simple right here, 2285. We are starting to see the S&Ps come off of limit up, although the NAS is still showing it's up at limit, but the S&Ps are coming off 2478 and resistance was at, limit up was at 2498 from what I see here. So we're actually coming off a decent amount here. We've come off so far 22 handles, but NASDAQ is still holding. And we actually, we've seen the NASDAQ come off too now. NASDAQ is now down to, well, actually we dipped to 72.75 and we jumped right back with the S&P came off. One moment. With that, you might see a little bit of movement here in the dollar yen, potentially. That is coming off a little bit here. The Aussie pushed to new lows after rallying in the U.S. session to a weekly resistance level of 63.03. You can clearly see that. Support remains 60.74 with the break lower finding additional support at 60.08. Resistance is going to be 61.59. So for right now, we're holding, and we looked at 60.74, and I believe that that's been close to the low. Let's see. Actually, a little bit lower. Actually, hang on. 60.64, and we had 60.74. We'll stick with that for now. Well, there was our 60.74 from before. And differences resistance is going to be 61.59. Let's go moving to the Kiwi. So the Kiwi formed an inverted hammer on Monday's session, tripping stops below 60 cents. Resistance on Tuesday will be 60.95. We are seeing the S&Ps continue to back off here. They're 24.68 now, 30 off of the limit up move. Formed an inverted hammer on Monday's session, tripping stops below 60 cents. Resistance for Tuesday will be 60.95, followed by 61.20. Support will be 59.92. So we'll stick with that 59.92. I don't know why I had that 59 mistake there. So 59.92. $61.20 on the upside. And let's go move on to the dollar CAD. Dollar CAD exhibited another strong performance on the backdrop of falling oil prices. Resistance is 40.75 with an expected move to 42 cents even. Support is 39.25 followed by 38.50. Well, you know, crude oil right now is 29.86. We're off the lows. If you were looking at something intraday right now, we're just above the VWAP. VWAP right now is 29.73. We're 29.86. Looks like we've got as low as 29.76. You know, it's hard to fight this. And look at this strong dip. Look at this pullback. And then we finished here. So that's very, very bullish. And we push up a little bit higher. But nonetheless, I think that we could get a little bit. We're open to, I mean, they're open to get to 42. But I think right now we're, despite this bar, which is very bullish, because look how we came down here and tested all the way down here, came back and finished strong around the highs, and now look, we're just gently a little bit higher. So to me, resistance is going to be 40.75. I think this is amenable to a pullback once things slow down a little bit. So 40.75. So be wary, a little bit wary if you're long. Doesn't mean it can't go a little bit higher. It certainly push higher, but I'd be tightening up my stops at this point. I'd probably put those stops right there, which would be, if you're really trying to protect everything for all it's worth, right there, 39.24. 39.24. We'll actually put that today for the support, 39.24. Let's go into the dollar peso. Unbelievable. This peso. Peso launched to 23 even with the heavy losses in U.S. equities. Resistance will be 22.95. We're actually right there. Oh, actually below 22.95. So here's 22.95. right there. So resistance is going to be 22.95. Support is going to be 22.15, followed by 21.54. As I mentioned earlier, this dollar yen is all over the place, but for good reasons with the moves we're seeing in equities and then continued demand for the dollar. Um, to me, the way if someone was trading this at this point, I'd only just be day trading it, day trading / scalping, because it's just all over the place and I can't help it. But that's the way it's trading, which is good if you're a day trader. I mean, there's so many different instruments to trade right now, but certainly, like I said, whether you want to, I mean, if you want to focus on just trading the dollar yen intraday, you can probably do pretty good. Needless to say, the dollar yen's range on Monday was in excess of 200 pips. Well, there you go, but was still well within Friday's single day range. Tuesday's resistance will be 691. You can see here we did make it up here to 721. Will be 691 followed by 735. Support will be 568 followed by 505. So let's go with the 735 on the upside. And support is going to be 568. There. Let's move into the dollar. So the dollar index's range on Monday nearly mirrored Friday's move. The close was bearish, suggesting at least a pause in the big run. Support is a weekly pivot of 97.89, followed by 97.40. Resistance will be 98.44. So you can see right there, we're pressing up. There's a 98.44 right there. So let's set for today's resistance. Doesn't mean we can't move beyond that, because once again, the dollar funding. But that being said, this is where you may see the market, ease back just a little bit, and we're going to go with 97.89, the pivot, the weekly pivot. So we've been a bit all over the place here with the Kiwi yen as we came in yesterday, and you can see here almost had like an inverted hammer here, but we're still within a relatively tight range. You see here in from Friday's open here and Friday's close, we're trading within this tight range here. So we're actually going to go in and bracket ourselves between those two levels. So here, 65.53. And 63.74. And let's go move on to the euro yen. And look at this. This is what you call a long-legged doji. Look at that. Holy smokes. So the old bears don't have control, bulls don't have control. You finish in the middle of the day. But then again, look how it's been up and down. So generally, like say you get a long-legged doji, you're looking at what's the prevailing direction, in this case down, we're going to see it move back up then. But this is a little bit different. Look at this: up, down, up, down, up, down, down, up, 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 down. So once again, we're going to do what we did with the Kiwi. We're going to bracket it with the range from here. So we're going to go with 119.15. Basically, it's looking like an area where they could kick stops. You see right here, going further for the rest of the day. And on the downside, same thing, but not off this one, but the close and open here to generate stops further lower if we get that, which is going to be 1780. Holy smokes. This euro odd is like nobody's freaking business. Look at that. Mm-mm-mm. Now we're looking at a monthly chart. Okay, here's this low right here. You see there? And that's 84.75. $86. $84. Basically 84. And this high right here. And we're just above that. And this one high right there. Just above that too. We could go as high as 84.61. We've already challenged 84. I don't know. We've come quite a ways here. And we're already just below 83. We're going to, here's what we'll do, 84 and 84.61. And this is going to be support right there. And can trip some stops. Look, that's even the low for the day right there. See this high and that low? And it's going to be 81.45. This one's pretty clear. Just go with the high right there. If they're able to trip stops, I'm not sure they will be able to. I think it's getting a little bit tired up here at this point, but that's where they'll have the stops there, that high, which is 86.08. Let's take a look at a 2-hour chart. right there, 85.66. See right here, that's where they'll trip some stops. It's going to be support. You can see here, here, coming right across. It's going to be right there, 83.65. This thing continues to remain weak. It's going to be right there, 64.17. Going forward, we're still opening to move weaker, looking much further out, but at least for now, they may try and hold their own from these lower levels here. Okay, Bank of Japan. The Bank of Japan bought 100 and I think it said 121 billion ETF on yesterday. So much of this news is just flying by. SPOO's now at 24.50. Actually, some support here at 24.50. Resistance is going to be right there at 65.96. Then we'll move on to the guppy. As you continue to fade back in here, and support's going to come in right there at 129.51. And resistance is a big level right there, 31.38. And lastly, let's hurry up and finish what we're starting on. This market is going to be up and down, and the stops are just going to be right there, 2.0146. We had the 148, that's fine right there. And there's that level we're looking at from yesterday, which was actually comes in at 99.30. And we're seeing gold continue to move here, lower here at 1482. You can see this drop here. If we're looking here on a daily chart, some support comes in right there at, well, we're at right now 1484, and we're at 1482. S&Ps have gone in, gotten as low as that 2450 I just mentioned. Actually, they even got lower. They got as low as 24.41. And you can see this dip down here to 24.41. We bounced up to 24.55, and we've really come off of that limit up move. Same thing here in the Nasdaq. There we go. So that's all we have for here. We'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.